Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, LME 3-month nickel. The main pattern that has developed here is the dark blue December 25 to March 26 bullish shift pitchfork. In recent times, the dark blue middle time, currently at 21.95, had acted as an attractor over late April and going into early May. However, in early May, the market, prompted it seems by the combination of the April 24 high at 19,775 and the September low at 20,045, made a weekly key reversal down. That has seen prices eventually drop down to today, testing below that dark blue lower time and even lower. This week we have pierced from the top side the rising green short medium moving average, currently at 18,390. The July low at 18,265, and we're now through the flatlining mode medium moving average, currently 18,025, and that sits just above the the dark blue lower time. What seems to evolve from this move lower is a fairly acute bright pink bearish Andrews pitchfork, with prices now testing the declining bright pink middle time, currently at 17,985. And just below it crosses down through the lower time, that one it did that yesterday, day before yesterday. This seems to be an active and dominant bearish pattern right now. It's worth remembering that a little farther down we have that combination which we're testing and been bouncing up from today. It's a combination of the 50% Fibonacci line of the April 24 to May 25 move and the October 2019 high, both at 17,810, which is effectively the low of the market today. Now, that is all very well, but if on the other hand we consider the whole mid-April to date action as one very lopsided double top, Adam and Eve, then we have potentials. They're not targets yet because it's we're just breaking below it. Below the 50% Fibonacci line of 17,725, which we're not that far away. I think we may have actually. No, we've not reached it yet, but we're not too far away. For 17,725, that's a primary potential. And a secondary hard to reach the potential down in the 17,225 zone. I suspect I will, by next week, either have these potentials as targets, reached or unreached, or I may retire them. It'll be interesting to see which, but at the moment, looks like we're going to have them as targets and some of them possibly reached as well. LME 3-month zinc. It's been about 5 weeks since I last looked at LME nickel due to speaking engagements and conferences, but we are still here on this daily chart for a 6th week with the same big old pattern, and it is a big one and a pattern about which I've spoken about before, and also one newer, smaller pattern. The big old pattern is the bright red May 23 to April 25 bullish Andrews pitchfork, and especially the middle time, currently at 34.74. Which is just above the market, and it's sat gradually as a distant support, and it's become a little bit more interesting since the break higher over it in early May. Interestingly, since that break higher, prices have been mainly trapped between the support of the January 23 high at 35.12 and the resistance of the February 2018 high at 35.95. With the occasional foray up to the next resistance at 36.52. Then we have the second newer pattern, and that's possibly even a short-lived one if you really think about it. There's the dark blue April 25 to March 26 bullish Andrews pitchfork. That one isn't there. There's another pattern I'll speak about in a little while, but let me talk about this one, bullish Andrews pitchfork. And we've seen the market hugging the break higher and slightly more rise and slightly more acutely rising dark blue middle time. It's been hugging that for and that's currently at 35.49. It's been hugging that since about mid-May. There's also a potentially new pattern emerging, and so far I've not highlighted it. It is only at best a 4-pointer, 2 points on either side, and that is an April to date possible bull channel, currently 35.19 to 37.75, and it's quite a wide bull channel. The lower bull channel line has been tested all of this week, and I would reserve judgment on this until I see data, especially if we can see higher lows during the course of this week. We saw it on Monday and Tuesday, but not today. So I'd be very interested to see what's going to happen. We're getting squeezed a little bit by that middle tie and above and squashed into that nascent lower bull channel line. LME 3-month tin. In the big picture, the market here since December last year has been moving in between the very shallow bright red middle tie below, which is currently at 41.350, and the very shallow bright red upper tie above, currently at 58.770. And that's of the one big old pattern still even now dominating the market. And it's a bright red, shallow, big old 2020 to 2022 bullish shift pitchfork. A bright red pitchfork that is still in operation 4 years after it was created. In the time of its operation, we have seen the creation of a lopsided January to February head and shoulders top that failed, a double bottom over February that worked, and a double top between January to March that also failed, and most recently a mid-March to late April bull channel from which prices exited out on the downside only to reverse back upwards, and most recently a mid to late May small bull channel whose rise was also capped by that very same bright red, very shallow upper tie spoken of earlier. The third time this has happened this year. 8 weeks ago, I spoke about a piece of congestion which has become more relevant in mid-May and again this week, and I quote, "I would look closely at the 2022 high at 51,005. This may not look that great a congestion at first glance, but it was instrumental in making the center of the double bottom in mid-February and would thus not ignore it. We also have some fib levels for the whole of the 2026 move at 47,595, 49,775, keep an eye on that one, and 51,960, end of quote. These levels, especially the 51,005, have become very important in recent days. So, in the big picture over this whole thing, we have the makings of a brick wall above at the bright red upper tie, and some layered support below starting from the 51,005 area and heading lower. The recent low is not higher than the earlier one. It's actually about the same, maybe a little bit lower. So the market is not getting squeezed, but we are seeing the green short medium moving average currently at 58.60. And now the flatlining mauve medium moving average currently 50.370, not too far below, and they may prompt some action. But otherwise, until a new pattern develops, we seem to be in a trading band. A higher trading band, a wider trading band, but a trading band nevertheless. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.